Hello and welcome to the Pipnotic Symposium for the 17th of April 2017. Today we are going to look at supply and demand, drawing areas of supply and demand. We're going to look at the Crude CAD relationship, correlation, and then we're going to have a quick look at some upcoming software that I'm just about to release to the members. Okay, so this is what the agenda looks like today, as I just discussed. So let's jump in. Okay, so drawing supply and demand. I've had a lot of people writing and asking me how it is that we draw supply and demand. It's pretty simple, so I'm just going to go up over to the charts and show this in just a second, because I think this will help elaborate and perhaps clarify any questions any of you may be having. And then we're going to have a quick look at the supply and demand software update and answer the question, what has changed? Because it looks a little bit different, and there are indeed a few things that have changed within the core of the software, so we're going to have a look at those. Then we're going to talk about where we place a rectangle. Again, this is in relation to the supply and demand areas and how we draw them, and also to the update that the software now contains. So let's go over to the charts and have a quick look at the first one here, how we draw supply and demand areas. If we have a look at here at this pair here, actually let's go, that's oil, let's go to the CAD here. The CAD chart is showing us a lot of information here, and you can see if we have a look at this area just here, assuming this is where we wanted to draw our line, our rectangle, you can see that price came down to this area. We accumulated for 2 periods and then price left. So if we consider the quality checklist that we have, this looks like a pretty good area. Now it's against the trend, the shorter term trend, but despite that, this looks like a pretty decent area. It's going to turn up the mic a little bit. Okay, so how would we draw this area of supply and demand? Okay, what you would do traditionally is you'd find the candle that moved away from the area, and you'd look left and you'd look for the previous candle, and then you'd ask yourself the question, is this an accumulation candle? Yes, it is. You can see the white line in it. Then you'd ask yourself, is the range of the body of this candle within the range of the previous? Yes, it is. Then you go to this one here and say, okay, is this an accumulation candle? And again, here we can answer the question in the same way. Yes, it is. We have the white line, which tells us it's an accumulation. Then you ask yourself, is the body of this candle within the range of the previous? Yes, it is. But this is not an accumulation candle. So you can see that we have these two accumulation candles, and then we have this extended range candle. So I'm going to zoom in a lot here just to make this very clear. So what you do is you would mark off. Here we have two bodies in the accumulation. So what you want to do is you want to attach the rectangle to the highest body of these two. If there were 3, you'd look for the highest body of the 3. If there were 4, you'd look for the highest body of the 4. But here we have 2 candles, so we want to look at the highest body. And it looks like it's this one here. This is maybe slightly higher than this high of the body, or equal. So we're going to use that. And you draw the rectangle down to the lowest low in the entire area of accumulation, which is this candle here. So for this, our rectangle would look like that, just like that, which is great. You can see we look like that. So that's pretty much how we're drawing these areas of supply and demand. If we look at an area just up here, actually let's find a better area. Let's go to maybe another time frame, the hourly chart. Well, half an hour, just need an example. Okay, we have this one here. Here we have the green candle that left. Then you move to the left, the candle previous to the extended range candle, and you ask yourself the question, is this an extended range candle? Yes, it is. Is the body of this candle within the range of the previous? No, it is not. So we don't go any further left. This is the only accumulation candle in this area. And so now we do the same thing. We take the lowest body, so the body, the lowest part of the body of the candles in the accumulation. In this situation, we only have one that's closest to price. So you mark from the lowest body to the highest high, which looks like that. The indicator's done that nicely for us, as you can see. So the area of supply for this particular chart would look like that. You can see here it starts at 33.05 and it goes up to 33.12. So it looks like that. The indicator's done that for us nicely just here. So if we delete that, I mean, that's pretty much what we have. So we have demand, we have this one here, and for supply we had the one at the top there that the indicator drew very, very nicely for us. Okay, so that's how you draw these areas of supply and demand. I should actually move that up here, like so. And we kind of answer that question as well, and that's how you would pretty much place a rectangle. So you want to place a rectangle like this and like this, as I showed on the previous examples there. So it's pretty straightforward. But if you look at this, for example, if you look at this area here, you might think to yourself, well, how come the indicator is drawing that down here at the bottom, so really far into this accumulation candle? And that brings us up to the next point, which is a software update and what has changed. Well, the core of the functionality hasn't changed at all, but there are a few modifications to these levels. The first and most obvious modification to the software is that instead of there being a line drawn from here to here, now we have a rectangle. And I wanted to do this to help people visualize where these levels are located. If you just have a line here or a line here, which would have been the daily area of supply, it doesn't really tell you a whole lot about where it starts and where it stops. Well, sorry, you can see it starts here, but you don't know where it stops. And so by doing it this way, you can see that the daily supply stops here at the high of this candle here, which is the highest high in this area of likely daily accumulation. And so that was an important modification to this version of the software. Another thing that's very important is if you hold the mouse over these rectangles, you can see that here, let me take one that's a little bit, let me move this so you can see it. Okay, if you hold the mouse over here, you can see that here it says it's 24 pip area of supply, and for this account, on the risk that I have, I think it's 0.25%, then I'll be risking 4 microlots, which is not a lot of risk. If you go to this one here, this is 1 hour supply, this is 3 pips, and if I'm trading this area of supply and my stop is the size of this area of supply, then my position size is going to be 3.5 mini lots. And so it just gives us a really good indication of where these areas are, how big they are, and how much pip risk we have of exposure. If we take this daily area, 16 pips, so 0.7, so 7 microlots here. So it's just a really nice way to visualize these areas of supply and demand. And you'll notice that this here, we have an area of 4 hour supply. We're on the 4 hour chart. If you look over here, you can see that we actually have an area of hourly supply just up here. So if we go to the hourly chart, you can see that it's located just here. It's a pretty tiny area, but it's a supply nonetheless. And so the indicator is now drawing micro supply and demand on the chart that you're currently looking at. So if we're looking at the 4 hour chart, it's going to draw, in its current configuration, hourly levels of supply and demand on the same chart, which is remarkable. And if you look down here at the bottom, we have, let's remove this one that I drew, we have this 4 hour demand here, and within that we have an hourly demand. So let's go to the hourly chart and have a closer look in there, and you can see that it looks like that. It's just down here, and the 4 hour level is actually spot on, because you can see that we have these 4 hour bars, 2 bars of 4 hour accumulation. You go to the the hourly chart, and you can see this. We have this area here, price moves down, it comes up, then we have this test on this area of 4 hour demand before price leaves. And so you know that you don't want to be paying a price any more expensive than the lows of these candles when you're buying at this area of demand. And the great thing is you have a tiny pip risk, so your stop is going in uncharted territories for this particular chart, giving us a lot of protection for our stop. So that's a very important enhancement for this version of the software. So let's have a very quick run through of some of the configuration options. Okay, so as you can see that a lot of the settings have been removed, this is simply done just to clean it up. But we have the product key the same, we have the dashboard is pretty much similar. I've removed one of the settings there just to keep it nice and clean and clear. Round number levels, it's the same. We have supply and demand settings here. I've removed one of these because it was not being used and it was a little bit confusing. But you can still use the compact and the consumed areas of supply and demand if you wish to do so. If you don't want to look at the rectangles, we have the significance and all the other settings that are still the same. And then we have the greater period multipliers here, which is actually becomes even more important than ever. In the current configuration, you can see that I want to look at supply and demand. That's one period smaller than the one I'm currently looking at, so -1. I want to look at the current period plus 1, and the current period plus 2. So on the 4-hour chart or the hourly chart, we're going to be looking at hourly supply and demand. We're going to be looking at half an hour supply and demand, 4-hour supply and demand, and daily. So on this chart alone, we're going to be looking at a tremendous amount of information. So the cool thing about this is you can stay on your entry time frame, which for me is typically the 4-hour or the 1 hour, and I can see all of my longer term and medium term supply and demand on the same chart. So this is absolutely perfect. This suits me very, very nicely. We have the trend line settings, which are the same. We have the rectangle settings, which are also the same, and then we have all the other settings, which are exactly the same. So that's pretty much all that's changed. The biggest modifications to this version of the software are in the core of the supply and demand engine and the visual object generation algorithm, and that's pretty much it. So you're not going to notice much more than that. The current version is 1.5.2. That's the version you should be running. And I should maybe update the copyright there. Yeah, and that's pretty much it. Oh yes, one more thing. You can see here that we have now, instead of having the daily range, the current daily range, and a percentage of the daily range, I have the monthly range, the average range. So the average monthly range, the current monthly range, average weekly range, the current weekly range, average daily range, and the current daily range. So this is giving us a lot of insight into what the greater periods are doing in respect to range information. So when the monthly chart, when this number reaches this number here, perhaps we'll expect price to kind of move back into the range. So this is a nice piece of information to pay attention to, and the same applies for the weekly and of course the daily. So that's it. So that's pretty much it to for the software. Okay, let's move on. We have now the Crude and CAD correlation. A lot of, well, actually 3 people have written in and they've been asking about how CAD, the Canadian currency, and crude oil are correlated. So I'm just going to walk through some of the information in that and I'll show a couple of examples. And so, I mean, much of the FX earnings that get into Canada are a result of crude sales, and most of the sales are made in the US. So we have a lot of dollars flowing in to Canada as a result. And crude comprises more than 10% of the Canadian foreign earnings, which is actually quite a lot. And so crude oil is very, very important for the strength of the Canadian dollar. And of course, here we have the last point. Most importers price crude in dollar. You know, they have crude is X number of dollars a barrel. They don't say crude is X number of Canadian dollars a barrel. It's always in American dollars. And 90% of crude exports from Canada go to the US, which is a ton. I didn't realize that. I actually checked on this number here a couple of weeks ago, and I was staggered to see that almost all of the exports of crude go to the United States. And then we have the prices of crude. When the crude prices change, they affect the Canadian economy, and this is why. High crude prices result in more American dollars going into Canada, because of course the Americans have to pay more for the crude, and so they're moving more American dollars into Canada. And what do Canadians do with American dollars? Well, they're going to sell American dollars and they're going to buy Canadian dollars. And if you have lower prices, well, fewer dollars go into Canada, and this of course is going to have a less of an impact on the Canadian dollar. So there's going to be less strength on the side of the Canadian dollar as a result. Okay, and we look at like oil prices, generally speaking. I mean, oil prices are normally pegged to one of the following indexes. We have, I wouldn't call it an index, but kind of like a benchmark, I think you can call it. So we have the Brent blend, which is located in the North Sea. I think there are about maybe 3 or 4 places in the North Sea where they extract Brent. Then we have the West Texas Intermediate, or WTI. WTI is actually the name of the symbol that you'll see on your trading platform, and this is the most dominant benchmark, and this is the one I like to pay attention to when I'm looking at the Canadian dollar. And then we have the Dubai and Oman, and they're focused in the Middle East and in Asia. But generally, you'll find that oil prices are pretty similar. So if you're looking at the Brent benchmark, or the West Texas Intermediate, or the Dubai, these are going to be more or less the same, give and take. And so how can we use this information to trade the Canadian dollar? Well, when crude oil futures reach demand, it should attract buyers. And what will the buying of of crude do to the Canadian dollar? Well, if you're buying crude, you're moving dollars into Canada. Canadians are converting dollars, so they're selling dollars and they're buying Canadian dollars, which is going to make the Canadian dollar go higher, and thus the American dollar, Canadian dollar cross go down. So if there's a figure that comes out, as an example, crude oil inventories in the US, if these are lower than expected, this means that the Americans are going to be buying less crude from Canada, which is going to typically, or generally speaking, make the American dollar Canadian dollar pair go up. But if they're lower than expected, then America is going to buy more crude. If they're higher than expected, then they're going to buy less crude. And so, of course, this is going to affect the cross, the Canadian dollar, American dollar cross. And so, generally speaking, higher oil prices, higher CAD, lower American dollar, Canadian dollar. And typically, if you follow some of the Canadian bank analysts, Scotiabank is one that I subscribe to, and they typically send analysis in the mornings. And typically they'll show, instead of an American dollar, Canadian dollar, they'll show a Canadian dollar, American dollar chart. So just be aware of that. And so the Canadian dollar, American dollar chart, so the inverse of what you typically see, will actually follow like a crude chart. And if we look at an example of that, here we have Canadian dollar, American dollar, and the WTI, the West Texas Intermediate crude. And you can see how these are really nicely correlated. So you have both of them up here. When the price of crude goes down, the price of the Canadian dollar depreciates in relation to the American dollar. And the opposite happens when it goes up. When the price of crude goes up, then the Canadian dollar appreciates, the American dollar goes down. And so you can see how these are really nicely correlated for a lot of the time. But keep in mind that you can always look at this information, but they're not always going to be correlated. And if they're not correlated, then the price of crude is going to have less of a clout on the price of the American dollar, Canadian dollar. And so just keep that in mind. You want these two to be correlated to a relatively high degree if you're going to use it in order to position yourself on the American dollar, Canadian dollar pair. Good. Anyway, that was a really, really quick run through, but I hope it was somewhat useful. If you have any questions about it, you can fire them off, and we can have another iteration, perhaps delve down into some of these points that we discussed earlier. Okay. A new product. Yes, you might not know this, but I do work doing security work quite a lot, but I don't always. And so I'll do security work for 2 or 3 weeks of the month, and I'll have 1 or 2 weeks off. And during these 1 or 2 weeks that I'm not doing security work, I'm programming Pipnotic software, and so I'm constantly updating the products that exist, so the currency strength indicators and the supply and demand, and I'm also creating new. And I have just finished creating a new product which I'm currently testing. And this product is pretty awesome. I've been using it now for a little while, and I've been watching it, and it's a super duper tool. And this is my motivation for writing it. Well, currency strength can be a dog. I write it here, and this is for many reasons. If you search on Google how to use currency strength to trade, you'll see you'll see so many different variations of what to do. If one currency is high and the other one's low, some will say buy the strong and sell the weak. Others will say do the opposite because they're overextended. And so it's pretty difficult to find kind of a one-size-fits-all in relation to currency strength. And so I've written a tool which I will call something like the Pipnotic Currency Strength Histogram, which shows the difference between one currency in relation to the other in the form of a histogram. So you're going to see, for example, an Australian dollar, American dollar lines. You have the orange line for the Australian dollar, green line for the American dollar, and then there's going to be a histogram. And the histogram is showing us the difference between these two. And it's pretty magical what it does. So let's have a quick a look at that. So if I apply my default template to this, let's go to the Australian dollar, American dollar, because we had some pretty nice trades recently. Let's go to the 4-hour chart. Okay, so you can see here, I just need to draw on this area of demand here because it's what I use for this example. From the high of the body to the low of the lowest. Oops, good. Okay, let me go back to the 4-hour. Okay, we have this area of demand. Then you ask yourself, okay, should I take this trade or should I not? So price is moving down towards this area, and you can see that it is a daily area of demand. It's been tested once, so this is the second time back, and perhaps you're a little uncertain if you should take this trade or not. So what I've done is I've made this, which is the currency strength histogram. We have the American dollar, which is the green line, the Australian dollar, which is the orange line. We have the histogram, which is the gray bit here, which is ultimately the difference between these two values. And so price comes down here. You don't know if it's going to hold, and so you wait off. So you say, okay, I want price to show me that it's going to hold. So you can do this in many different ways. You can simply put a limit order there at the 7,500 area in anticipation that price is going to go higher, and put your stop 50 pips lower. Or you can wait for confirmation. And how would you do this? Well, typically you would wait for price to kind of react on it. But there's a new way that you can do this using the currency strength histogram. And you can see here we have a low. We have a lower here. But the histogram, we have a low. We have a higher low here. What does that tell us? Well, that tells us that there's a decrease in bearish momentum for this currency pair. Price fed in to the daily demand. It was rejected. But did we know that that was going to be rejected? We had a pretty good idea that it was, because when price is around over here on maybe the third or fourth test in this little area here, you can see that the Australian dollar in relation to the American dollar is starting to pick up strength. As a matter of fact, the American dollar is depreciating in value in relation to the Australian dollar. That's actually what's going on here, because you can see we have lower highs here on the American dollar, but the Australian dollar is pretty much staying flat at this peak and this peak. You can see that very clearly. And so ultimately you want to wait for price to move away if you're looking at price, but if you're looking at this information, you can actually see pretty clearly that that this pair is likely going to respect this area of demand and continue higher. And so you can either click into the trade here. You can go down to a smaller time frame and look for a micro area of demand at which to buy, or you can wait for price to show you, which it does here. Then you look for the green candle that leaves the accumulation, which we had here, and you buy down here with a very, very small risk. We have another similar situation going on just down here, where we have the Australian dollar, American dollar returning to this area of demand for the third time. You think, ooh, is it going to hold? What should I do? Should I just buy here as a limit order? And then if you would have done that, you would have to stomach a bit of a drawdown there. But if you would have waited, you can see here that we had lower lows here, but you can see that the lows here are getting higher. So we can actually see that these two currencies are moving towards each other strength-wise, which is really nice, because this tells us that we actually can see price slowing down at this area of demand. So again, you can either click into the trade, or you can go into onto a smaller time frame. We can do that quickly, maybe the half-an-hour chart, and you can find an area to get in at, and you can see we have a nice one here. We have this one here. We put our stop 5, 10 pips below. We came down to the low, so you would still be in that. And you have an incredibly small risk. And price moved up nicely as anticipated by 4-hour supply and demand and strength. So again, here we have a really nice and interesting example of that. Yeah, so I mean, if we look at the configuration options here, super simple. Product key, the look back, I'd leave it on 20. That seems to work pretty well. We have the symbol prefix and postfix. So this symbol on my platform was called AUD USD. If your broker puts characters in front or after the symbol, then you have to put the characters in front in the prefix and the characters after in the postfix to help the indicator identify the names of your symbols. I'll eventually figure out a way to automate this, but for the time being, it's a manual procedure. Then we have color settings, and that's it. Nothing else. Super, super easy. So out of the box, it does exactly what it should. If we have a look, if you put it on another pair like the pound US dollar, you're going to get the exact same thing. Here we have the British pound, which is the red, the American dollar, which is the green, and it works exactly the same way. You can see the price is moving lower, but the strength is actually not. You see the pound picking up. We're buying into a weekly demand just here. So you click in with a stop, or you buy at micro demand, and then price goes north like a freight train. And this is happening all the time. Again, we have something going on here. Price is reaching this daily supply at the top here on the pound American dollar, but you can see that the strength, the highs of the strength seem to be moving lower, and so maybe this will end up being a pretty nice short example, depending on what happens when the week opens or Easter opens. But this is what it's currently looking like. We have higher highs in price, we have lower highs in strength, so potentially price could move lower here. We have a look at another example, the Euro US dollar. We have the exact same thing going on here. So you can see that price is moving higher, higher highs, but you can see from about here, a little bit before, oops, come on, around here, price started to move down. So again, this is telling us that price is slowing down. And so you want to wait for price to show you by reaching an area of supply, which you can see we have something here. We have this here. We'll take both of them. This is where price poked into. Yeah, we poked into, so we're expecting price to stop, but we want to make sure that it does. And you can see that we're gradually getting confirmation for this because we can see the strength of the Euro USD dwindling. The American dollar is picking up, which is negative for this pair, and price thus begins to drift lower. So that's what we're looking at there. Let's take, okay, one more example, the dollar yen, see if we can find something similar. We can see here that we have lower lows here. We can see that the strength seems to be moving higher. So you go to the higher time frame and see what it is that price is reacting on. You can see it's reacting on this small, we'll take this one here, this small area here. So we expect price to slowly start drifting higher. It poked into it. We had a low here. We had a low, a low, a low. We had a low and a higher low. So you can see that things are changing. The yen is getting weaker. The American dollar is looking pretty fat. So you could go to so pretty strong. So you could go to a smaller time frame and then find a nice area of demand at which to buy. Keeping in mind with the fact that we are buying at daily demand. Excuse me. And it works on all time frames. I mean, you can do this on the weekly chart. You can see here, again, a really good example. Price kind of formed this round base, and you think, okay, is this going to keep going or is it going to stop? Well, you can see that the strength of this started to turn around already at this low here. So again, a really good indication that the price is going to turn around and continue going higher. So it's an incredibly powerful tool, and it works again on all time frames. So anyway, I'm going to publish that probably towards the end of this week, and I hope that that you all will use it and embrace it and give me lots of feedback so that I can make this tool better, and hopefully I think this is where we're going to go. I've been using this an awful lot, also for testing purposes, but I think that this will likely end up being my currency strength indicator of choice, because I'm starting to narrow down my the pairs that I'm trading. Now I'm trading 10 pairs, plus or minus one or two, but typically staying around those 10 pairs, and I'm doing my entries at supply and demand, and I'm looking at strength information, as a matter of fact, this indicator, to help me gauge whether a given level is going to hold or not. And it's just a super duper tool, and it looks like MACD. Everyone is familiar with MACD, and so it's not like we have to learn a completely different tool, and it works the same way. So you can use it for momentum entries. Typically speaking, when the histogram is below the line, you want to be selling, but you can also use it for divergence purposes, as we've illustrated previously. So anyway, but that's the product that the new one here, the Pipnotic currency strength histogram, and that will be available towards the end of this week. So that's that. There are no questions today because I recorded this session actually today, but it's Easter holiday here in Denmark and most of Europe, and my boys were at home, and there was so much noise in the background that I had to re-record this whole session, and so I'm sparing you for the sound of my two boys beating on each other. Anyway, I think I'll leave it at that. Thank you very, very much for watching. If you have any questions, something you want me to cover next week, please let me know. And if you have any comments about this week's sessions, I'll be delighted to hear from you. Anyway, until then, hope you had a lovely Easter, and I will see you all next week. Thank you very much for watching.